Hello, I'm Finola Burke from RaaS, and today I'm catching up with Paul Guilfoyle, Managing Director and Group CEO of secure remote communications technology company, Harvest Technology Group, ASX ticker HTG. Welcome, Paul.
Thanks, Finola.
You recently provided a trading update to the market which highlights significant growth in Q2 revenue with a guided range of between 950,000 and 1.05 million. How much of this growth is coming from recurring revenue and how much from new contract wins?
So approximately 60% of the revenue is from existing customer growth and reoccurring revenue, with just under 40%, which has come from some new contracts as well that we've seen draw into the business this quarter, which has been really good. We didn't put a forecast out for this quarter being the Christmas quarter, so we're cautiously optimistic. So to see the growth this quarter has been really good to see.
And Paul, was that those new contracts, were they coming from the Infinity product, or is it a range across the range?
A range of products, all from the Infinity range. We use the node stream. Our IP, our technology, all stems from the node stream protocol, so it all comes through that. And I think importantly to note as well that the quarter saw us grow into some of the newer markets that we're starting to grow into now as well. So not just the energy sector, which is really good to see.
And you've developed some strong partner relationships with global players such as Inmarsat, Speedcast, Marlink, and RSM. How are they helping Harvest Technology Group develop its business?
In all honesty, we would have liked to see more growth with some of our partners, and we haven't seen that. And as we get to the back of this year and into 2023, we are working closely with our partners to reflect on what we've done right and what we've done wrong, and where we've gone wrong to try and make the appropriate changes. Our biggest partner throughout the year has clearly been Inmarsat, and the working relationship across multiple sectors with them has proven to be very valuable as we go into this quarter and into next quarter. Also with Marlink as well, we've had some really great opportunity that we've commercialised very quickly with Marlink, which has been good. Speedcast, we're growing into it. It's been slower than we would like, but we're hoping that into 2023, with the work that we've done with them over the last 6 months, that we'll start seeing more traction through their network as well.
Mm-hmm. Now, you've answered a little bit of this, but what are some of the challenges you're facing as you grow the business, and how are you addressing these?
I think over the last 2 years, some of our biggest challenges, as it's a cliche, but it's very true, has been COVID. We launched our RaaS product in March at Oceanology in London this year. That was our first public appearance, really, as we started to come out as a technology company. So COVID has definitely played a part in us not being able to travel, so to speak, and attend shows and gain more awareness of our product. So since we've undertaken a much more focused approach on our marketing and our PR as a business, and we've had our representatives in the US and the UK that covers the Middle East as well travel a lot more this year and speak to our customers and partners. We are seeing now that pay dividends in increasing pipelines and increasing revenue. So we're not immune to that COVID risk, and we're also obviously in Perth. We've seen a big spike in COVID, so at any one time we've had nearly 30% of our workforce off at home as well. So that creates some delays. I mean, outside of that, we've all found ourselves out of COVID now, but top of dropping into pretty dynamic markets. So as a business, we've really had to look into the business and shift our priorities to one from growth, but to management of capital. to make sure that we protect the business's future and our team's future. So we've made changes in the business. We've brought a lot of roles back into Australia as well, because the US exchange rate wasn't doing us any favours. I think through Q1 and Q2 2023, we're going to put a heavy focus on organic growth in the business and just make sure that we manage everything prudently and for the long-term future of the company. So, they're just some of the challenges in the macro environment that we're all dealing with as companies.
And without getting you to commit on a date to this, Paul, what does break-even look like for Harvest Technology Group? I mean, is there a target annual recurring revenue rate that gets you there?
Yeah, so with the changes we've made in the business, the target's around 650 to 700,000 per month. So we're getting close, and it is a priority to get to that point as a business. We noted in the AGM that we anticipate that we're going to get there in 2023, once we reach that point, we'll be able to look back into the business then and say, okay, then how can we start reinvesting back in the business at that stage, and how we're working with our partners. But we anticipate that we'll get there this year. If we see the continued quarter-on-quarter growth that we've experienced through 22, it's looking promising to get to that target. So.
Well, great. Thank you for your time today, Paul. I'm looking forward to catching up with you through the course of 2023 to check on Harvest Technology Group's progress.
Brilliant. Thank you very much.